Welcome to Blockchain Recorded, the podcast for the tech curious, where we talk about anything and everything related to the exponentially evolving crypto, blockchain, and Web 3.0 space. Our mission is simple: to share knowledge, facilitate discourse, and help evolve education in blockchain fundamentals, decentralization solutions, and relevant use cases for today's digital economy. We at Blockchain Recorded are not registered investment advisors and do not deal with financial or trading token elements, nor offer any licensed financial services. The content of this podcast is for informational and educational purposes only, while the opinions of all parties involved are their own. I'm your host, Nina Tserar, and now let's talk blockchain. Before we begin, this podcast is possible by our sponsor at Ambire. The Ambire wallet is one of the top products in crypto asset management. It is the first open source, non-custodial smart wallet that delivers exceptional user experience combined with solid security. With Ambire Wallet, users can easily navigate the world of Web3. It comes packed with features like built-in swaps, cross-chain bridges, integrated earning opportunities, and more. In addition, Ambire offers things like human-readable transaction parsing, eliminating ERC20 approvals and front-running protection. The smart wallet uses gas abstractions that allow for unique features like paying for gas with stablecoins. Users can batch multiple transactions to save time and gas fees. The wallet also supports NFTs and allows you to connect to any dApp via Wallet Connect. You can use it with an email and password or add hardware wallets or hot wallets as signers to upgrade your security. And the best part, Ambire speaks human. The UI is friendly and informative, ensuring you understand what you're doing and eliminating risks for mistakes. Ambire Wallet users are currently eligible for continuous wallet token rewards. To learn more and get your Ambire account today, visit www.ambire.com. That is AMBIRE.com. So today with us, we have Nevin Freeman. He's the co-founder and CEO of Reserve, where he oversees strategy, legal, and team coordination. Nevin is an entrepreneur who has co-founded 3 companies. His purpose is to solve the coordination problems that are stopping humanity from achieving its potential. And he's particularly concerned about averting the long-term risks posed by the development of artificial intelligence. Today, we will talk a lot about stable currencies, first painting the macro fiat stability picture, and then dive into stable cryptocurrencies, Reserve, and its protocol. So on that note, Nevin, welcome, and thank you for taking the time to talk with us today.
Yeah, thanks for having me. Nice to meet you, Nina.
I have been following you for some time now, actually, and the work you do I think is remarkable. You give crypto a meaningful, humanitarian, and much needed use case that's actually really admirable.
Yeah, I mean, the thing that we're trying to do is kind of just like the original idea of cryptocurrency, right? Is sort of creating a form of money that is not dependent on governments, and that's free and open and accessible to anybody. So in a sense, the idea behind it isn't very inventive at all, but we've had to come up with a bunch of ideas for how to try to make that work in practice.
Right. Well, let's start with, I know you've spoken on many podcasts and many talks, and I've actually listened to quite a few of them, but let's start with, in terms of what are your beginnings and how did you end up in the crypto space? As in, did you actually have like an aha moment?
Yeah, it's a bit of a twisty road. I mean, when I was younger, from a very young age, I sort of had the belief that environmental issues were the only really big issues on the planet. Like everything seemed fine in my world growing up. And I was like, okay, we just have to solve global warming and then everything will be great. And by the time I was like about 20, I finally kind of broke out of that way of thinking and realized, like, wait a minute, I've been pretty confused. I need to kind of like step back and reevaluate my view on reality. And so, yeah, I started thinking about a whole lot of other different problems that the world faces, and what to do about them. And as you mentioned, I'm very interested in artificial intelligence, and that's because it could solve so many problems if we get it right, but it also could cause so many problems if we get it wrong, in my view. And so I spent quite a while working on trying to help the movement of people who are sorting out how do we produce safe and beneficial artificial intelligence through a number of different avenues. And it was while I was in that community that I initially learned about cryptocurrency, because I think it was because Wei Dai was part of a discussion community called Less Wrong on the internet, which consists of a lot of people interested in AI and AI safety. And he was also part of the cryptocurrency, the cypherpunks mailing list, and was thus aware of Bitcoin from the very start. And so people in that Less Wrong kind of human rationality community started talking about crypto pretty early on, back in, I think it was like 2010 or so. And so, a number of us ended up buying a little bit of cryptocurrency back on Mt. Gox, some Bitcoin, and thinking like, well, if this is going to become the next form of money for the world, maybe we're early to it. Maybe we should buy some. I wasn't, an investor or anything at the time. I was just a young person with, a tiny bit of spending money, putting a little bit of it into this random new thing. And, but it was that that experience that caused me to a couple things. So it's like, one, I started thinking about, just from like a speculator's perspective, thinking like, well, what would have to happen for Bitcoin to become a currency of the world? And there was like a conversation over dinner one night with some acquaintances where we ended up concluding, or at least I ended up concluding, that like the more Bitcoin would be adopted, if it would be adopted, the more people would be buying into it, the more that would be driving the price up. And it just seemed, I wasn't an economist, it just seemed intuitive to me that if the price of something, if the value of something keeps going up, you wouldn't want to spend it, you'd want to hoard it. And so it seemed very unlikely to me that people would end up using it transactionally. And so I kind of concluded like, well, this is like a cool idea, but it's sort of a flawed experiment from the beginning because of the fixed supply in the sense of being able to work as money. And unfortunately for me as a speculator, that led me to sell all of my Bitcoin in 2012. But yeah, whoops. But it opened up the door to like before then, I had always sort of thought that like money was just kind of baked into reality, was kind of this thing that was controlled by the government and that no one could ever really do anything different about it. But that did kind of start me thinking about like, that's weird. Like, so are we allowed to just create different forms of money if we want to? And I remember when I was young, even like feeling like the stock market was part of the government. Like when I was a kid, it just seemed like the stock market was like a government entity, and there wasn't anything that you couldn't go make a different marketplace or something like that. So yeah, there's this kind of this like awakening of like, oh, wait a minute, we can change this, we can make new versions of this, etc. And it's interesting because actually, like with the history of the U.S., we kind of had a phase as a country where we were like, private money is not allowed. We played around with private money. We decided no. And there's even like laws saying you can't create your own coins. And then interestingly, we just decided not to apply those laws to digital coins. We just kind of, it's almost like society forgot about why we made those laws or something. And we just have decided like, okay, no, it's fine to create coins again, as long as they're digital, which is it's kind of weird. I'm still a little puzzled about how that happened, honestly. But yeah, so basically, at that time, started thinking about, could we have a form of money that didn't depend on governments, that was somehow better? I was interested in that, because I was thinking about like, well, how do we improve capitalism overall? Capitalism is obviously really powerful. I think modern Americans don't actually often appreciate the benefits and power of capitalism. We tend to focus on, at least the liberal side of the spectrum tends to focus on all the problems with it. And that was certainly true of me as a kid. I sort of thought money was bad. And if you were wealthy, that meant you were like greedy and like not a good person. I don't really think that anymore. But I was kind of coming from that ideology. And so, I spent some time thinking about like, well, how do we improve capitalism? How do we make it so that the capitalist system doesn't cause kind of the extraction of resources and the exploitation of people and all of that? And so I thought for a long time about like, well, is there some way to make a different currency and kind of a different capitalist operating system on top of that currency that would somehow solve those problems? And I don't really think that there is an obvious answer there. I don't really think that the creation of non-fiat cryptocurrency will solve all the problems with capitalism, although programmable money is an interesting thing. And maybe with programmable money and smart contracts, we could start to change the way that certain things work in capitalism. And I still I'm kind of curious to see what we're able to figure out. And I do think that there's a lot of utopian people in the crypto, kind of Ethereum and other crypto communities who would like to see that as well. So we'll see how that goes. But so basically I came at it from that perspective, and then really what, I was there sort of mostly focusing on AI stuff, and but like thinking a little bit kind of in my evenings about like could we somehow improve capitalism, and eventually 2017 rolls around, there's a huge crypto bubble, lots of money and energy flowing into the space. And that caused me to kind of go check in. I sort of hadn't been paying that close of attention, so I hadn't understood like what smart contracts were. And so went and checked in and was like, holy crap, like this is nuts. Sort of understanding the advancements that had been made. And actually, I know this is a long-winded thing, but I'm telling you the actual story here. Like I looked at what was going on in the crypto bubble at the time, at first from a sociological perspective. I didn't immediately think, okay, we should go try to create a cryptocurrency that works as money. I started off kind of trying to understand, why do bubbles even happen?
Right.
I'd always been confused about the tech bubble, and because I hadn't really been paying attention at that time. I was quite young when the tech bubble happened. And so I was like, oh, well, there's another one of these happening, and I'm living in the Bay Area. I can just go talk to people and understand like the dynamics at play. So I started reading about like the very first stock market and like the history of speculation and stuff, and just going to crypto meetups in San Francisco and talking to people and just trying to figure out what was going on. And that taught me a lot about speculation and the speculative cycles of markets and like the psychology behind it. But then through that contact with the industry at that time, even though it was kind of insanity and everyone kind of knew that it was insanity, I couldn't help but notice, like, wait a minute, people are still talking about Bitcoin becoming money. And that seems weird. It's like, why at this point are we still thinking Bitcoin is going to be used as a currency? And, Tether had been invented. So there was kind of this basic idea of a stablecoin. But there weren't, it still was not clear to me that there was any credible attempt to create something that was independent of fiat money, independent of like the US dollar or any other fiat currency. Even decentralized attempts like, Maker already existed at the time, and others had started thinking about different ideas. They all tended to assume that they would peg to a fiat currency like the US dollar. And there was like a little bit of a discussion of like, maybe you'd peg to SDR, or maybe you would try to peg to somehow incorporate consumer price index data, but no one really had a plan for how to do that. And so this led me and some friends to kind of think through like, well, how would you do that? Is there some way that you could actually create a cryptocurrency that was independent of fiat money? And so, the idea at that time that captured me about that was, number one, like I guess I shouldn't say number one, but like in no particular order, like I was excited about making money. I want to make a lot of money. Yeah, I was. Yeah. And I still am. And part of that is that, there's things that I want to fund that I don't know that I can convince anyone else to fund. And so if I have money myself, then I'll be able to pursue those things. And some of them are in the domain of AI safety. In particular, I'm interested in trying to create like a productive global regulatory framework. Not sure if that's possible, but that's something that I am interested in doing at some point in the future. But anyway, I really don't want to do that. I would rather not do that. But I hope somebody does it. And I'm willing to do it if nobody else does it. I would be happy to fund other people doing it. I think that would be better. But anyway, so money was a draw, but also like, in terms of like ideologically, the draw initially was the idea that you could have a currency that wasn't dependent on governments. And so when major empires fall apart and fiat currencies fall apart with them, you would have a currency that would sort of persist throughout all of that and be sort of this stable thing in the background that would allow economies to keep functioning, rather than having sort of a economy sort of revolution every time a reserve currency falls apart. And so that was kind of like a very big abstract idea, a very long-term idea. But then as soon as we started actually concretely looking into this project and thinking like, well, if we were to do this, what would it actually look like? we immediately started thinking about, well, okay, there's actually parts of the world that have currency issues today that are much more pressing. And so is there something we could do to start the project off that would provide immediate utility to people in the world in those situations now? And so that's what led us to focusing on Venezuela and Argentina, two economies that, have dealt with quite a lot of inflation issues in recent years. And so that's how we got into that. At first it was just like looking at numbers on the internet, being like, wow, these numbers are crazy. What must it be like to live in these places? And then, spend some time traveling and talking to people, and decided that we wanted to focus on providing a practical solution as the first stage of the project. So that's kind of how we got from environmentalism to AI to trying to create a non-fiat cryptocurrency.
Interesting. So you actually went from AI to the crypto part, but I think it's admirable that you're actually doing something with the utility part, and the fact that there's a mix, right? There's a philosophical, sociological, psychological. I think that's an awesome way to start with. But so obviously, we're all familiar with Argentina's ongoing devaluation crisis and the abnormal economy, and as well as Venezuela. For that reason, like you said, Latin America is obviously the region you're covering. I just wanted to intervene here because it's want to maybe touch upon a little bit about just the stable currency picture in terms of what it means in the macro fiat world. So I just wanted to say, my family is Slovenian, which means that we endured the ex-Yugoslavian hyperinflation crisis in the late 1980s.
Yeah.
I'm probably older than you are, but I grew up just as a little girl. My father was a banker, and we moved back and forth from ex-Yugoslavia to the States. And it's funny because he taught me the value of stable currencies. Then it was, for us, it was the Deutschmark, the dollar, because we moved back and forth to the U.S., and then the Swiss franc. So the mentality in ex-Yugoslavia was, it's good to have these stable currencies. So I remember that as a kid, and remember always, this is not obviously, the story is not about me, we're talking about you, but just to illustrate that I've actually lived through this hyperinflation, and not sure if, there's so much political, is whether or not when the currency falls or starts inflating itself or whatever, is that like a ripple effect of everything that's going on behind the scenes. But I wanted to sort of ask you, what do you think are the most radical sort of historical cases of a currency losing its value, funds being confiscated, and assets being depreciated? Besides the tulip making, but
yeah, and I'm definitely not, I'm not really an expert in the details of the history, but from my understanding, the ones that I'm aware of, I think, there's an event in Argentina, I think it was in 2001. They call it the Corralito, where basically in that situation, they had been defending an exchange rate pegged to the US dollar for a while, and that had been going well. And essentially they ended up running low on US dollar reserves to defend that peg. And so there ended up being a moment in time where people's US dollar bank deposits were suspended, or their ability to withdraw was suspended, a little bit like what's happening with Celsius right now, incidentally. And then their dollar deposits were forcibly converted to Argentine pesos eventually at something like a quarter of what the prior exchange rate had been. Right. And so it's kind of like you find out that you can't withdraw your money, and then you eventually can withdraw it, but you only have a quarter of the value that you thought you had. Right. And that's similar to what it sounds like your family's experience was like, to the point where your parents would kind of try to impress upon you, hey, you need to think about it this way or that way. There's definitely like a deep sort of trauma in the Argentine culture where people refer to that event. People teach their children not to trust keeping money in bank accounts in some cases because of what happened there. And then interestingly, much more recently, there's been a kind of crazy situation that's a little bit similar, although I think perhaps for different causes, in Lebanon. And I'm not an expert in what happened here, but for anyone listening to this who's curious about it, you should check it out, because that's a case where at least the popular narrative is that the banking apparatus just really operated in a really what's the right word? Like a very irresponsible way. And people accuse it of being almost a Ponzi scheme, where the essentially the rate of return, the amount of interest that was being paid on US dollar deposits was totally unsustainable. And they just ended up in a situation where there really weren't dollars in the system to honor people's withdrawals. And that caused a huge issue and ended up leading to a devaluation. And so those are a couple of examples in actually relatively recent history. I actually don't know the year, but Zimbabwe famously had a really extreme hyperinflation. I actually don't understand the details of what happened there. And then, one of the older cases that people talk about, is Germany after the war. There's sort of the famous pictures of children playing with huge stacks of money, and people, having to put money in wheelbarrows. The thing is that it's frequently the case that so if we look at say Venezuela and Angola had a major devaluation several years ago, and Venezuela, obviously had ongoing hyperinflation. In both those cases, you had a situation where the economy is dependent on the export of oil. Angola and Venezuela both are like a mostly export oil, mostly import everything else type economy. You have tons of US dollars flowing into the economy all the time in exchange for the oil that's flowing out. And so then if there's anything that disrupts that particular channel to the point where the oil sales slow down, then all of a sudden the flow of US dollars into the economy and sort of the flow of demand for that local currency can sharply decline. And that happened to both Angola and Venezuela. Actually, maybe at a similar time now that I think about it, because basically if you have a drop in the global oil price, and this could happen because of discovery of new supply or some sort of sharp reduction in demand, then all of a sudden, some oil-producing countries will become uncompetitive compared to whatever other sources are a bit more efficient. And so you can have, these really dramatic drops in the amount of US dollars flowing into the economy, and thus the amount of demand for the local currency. And so basically the central bank that normally would be managing a flow of dollars and you sort of are at an equilibrium, all of a sudden can run dry on dollars. And so then oftentimes you get capital controls instituted. And that makes sense. If you're the person managing the sort of the foreign exchange for the entire country, for the entire economy, you have to make sure that your country as a country sort of has enough dollars for its businesses to import the most critical goods and services, I guess mostly goods, like food and medicine. And so you get a situation where it's okay, you can no longer convert your local currency to foreign currency through the official channels unless you are importing food or medicine, or maybe another small number of critical things. And so what happens is people in that situation panic because you're oh my gosh, I can't convert this local currency to US dollars. We're in some sort of crisis. The local currency is probably going to devalue. And so what do? You go to the black market to buy dollars informally, not through the central bank, whether it's electronically or often in cash. And when everybody rushes to that parallel market to buy dollars, there may not be a whole lot of liquidity in that parallel market in that moment because everyone's used to going through the central bank. And so that can very quickly drive up the price of the dollar in terms of that local currency, sometimes many-fold. And that happened in Angola to the extent where all of a sudden your local Angolan kwanza, just feels like it's virtually worthless compared to what you thought. And that can cause a real crisis of confidence for that local currency. And so, it's kind of this weird thing where capital controls, people often think, I thought that capital controls were often just there to try to prevent people from trading out of the local currency, sort of trying to artificially prop up demand for the local currency. But oftentimes there's more mechanistic objectives where it's no, we just have a set number of dollars flowing into the economy, and we have to make sure to ration those dollars in order to make sure that we can import the critical things. And so we have to institute this policy. And oftentimes it's actually not that discouraged for people to trade dollars on parallel markets. It's often tolerated because it's understood that businesses need that liquidity, but they're just not allowed to do it at whatever rate the central bank is offering to the businesses that are importing whatever is considered critical. So that's how people talk about, you get these like situations where you have multiple exchange rates. You have the official rate and the unofficial rate. Sometimes you have multiple different official rates for different industries or whatever, and people often try to take advantage of those and arbitrage them. But like, if it's sort of like people tend to look at those and sort of blame the people who are running the system, being like, oh, they must be corrupt, they must be whatever. And sometimes they are, but I found that the more you learn about it, the more you're like, oh, if I was in that situation, maybe my hand would have been forced to do the exact same thing. And it's just sort of like an unfortunate consequence of the overall economic situation that is played out. And, governments, I think oftentimes could be more fiscally responsible. And oftentimes I think governments do get themselves into these situations via overspending or overborrowing. But oftentimes it's you kind of just get forced into those situations, I think.
Mm-hmm. Yeah. Well, you advocate for access to stable currencies to be considered a human right. All right, let's switch a little bit. And actually, there are 2 quotes from your website that caught my attention, and I know that you speak about this immensely. So the first one is stable currency, a human right, right? And then the second one is a stable, decentralized, and inflation-resistant world reserve currency not pegged to any one fiat currency. Now, I know the latter is your long-term mission at Reserve, and you've discussed both topics at length already. But can you just briefly speak to this?
Yeah. We realized maybe a year or so ago, we're trying to distill this attitude that we have about it being very important for people to have access to stable currency. And we realized that humanity kind of does have a framework for talking about which things are like truly essential to, in the words of, I think, the UN, like living a dignified human life. And that's the idea of a human right. And rights are kind of weird things. It's like, how do you decide if something should be a right or not? But one way of thinking about it is like, if we sort of agree that it's essential to a functioning, flourishing life, and if it's something that really is within reach of offering to everybody, at a relatively low cost, then we tend to consider it a right. It's like, clean, access to clean, drinking water or something, for example. It's like everybody needs it. And it's like, yeah, it seems like we can do that. It seems like something that's not particularly difficult, as opposed to, for example, I don't know, like let's say like, I'm just making this up, so maybe this is going to be a weird example, but like, you can imagine saying like, well, mental health is a human right and everyone should be mentally healthy, because if you're not mentally healthy, then your experience is going to be bad and full of suffering and problems, and you'll make bad decisions and so on. But we don't know how to offer mental health to everybody. That's a very complicated thing, and so it wouldn't make sense for us to decide it's a human right because we just don't know how to offer it. And stable currency is kind of interesting because you could argue that it's like mental health, where it's like, well, it's a very, economics are very complicated, currency and markets and so on are very complicated. And so maybe there is actually no way to guarantee access to a stable unit of currency to everybody. But our attitude is kind of like, yeah, sort of, but like technologically speaking, it actually doesn't seem out of reach. It actually seems like the forces that make it so that some populations don't have access to stable currency are often political or legal. And if we just sort of were willing to use the technology and knowledge at our disposal, we actually could provide access to stable currency to many more people or to everybody. And so like these days, we're doing that by basically opening up the access to the US dollar to people who maybe would have had a harder time getting that access because the US dollar is relatively stable. And then in the long term, we're sort of looking for a way to not even depend on something like the US dollar, so that we could actually, from a technological perspective, offer that stability to the entire world indefinitely. But again, it's like it really ends up being like a legal or political challenge to do that, I think.
You have strong knowledge regarding stablecoins, given everything that I've listened to. I mean, we all know USDT and USDC and the recent Terra and downfall. But In fact, you actually warned about the algo stablecoins a few years ago. I'm sure everybody asked you this at the Latin American Bitcoin and Blockchain Conference. I also saw the video you posted on your blog trying to explain it. I think it would be beneficial for our listeners to get a wider perspective. But I wanted to ask you, what, if anything, has changed or reaffirmed in your perspective post the Terra collapse?
Yeah.
Hopefully you're not sick of talking about it, but
No, I'm not. It's a good question. What has changed? I mean, the thing is, like, we'd already seen the senior shares model be tried and fall apart a few times. And so in a sense, I would say very little has changed in my perspective. It sort of was obvious to us upon just thinking it through without even seeing any examples. And then the examples have kind of confirmed what was suspected. I do feel like, though, this is like a slightly more powerful confirmation because, there's the people who were believers in that idea would say, well, yes, this thing has the potential to fall apart, but so long as demand is maintained, the party will keep going. It's sort of like as long as the music is playing, right. It's fine. And there was a way in which Terra and Do in particular, exerted a really powerful reality distortion field, which, ultimately ended up being the cause of all of this destruction. But, before the collapse, you couldn't really be 100% confident that they wouldn't somehow manage to pull it off, to just keep the music going forever. Mm-hmm. So I think that having something, having a senior share style stablecoin fall apart at that scale, even with an enormously powerful marketing force and quite a big war chest and an enormous community of believers and so on, having that fall apart, I think just makes it that much more obvious how quickly the sentiment can shift on these things, right? And that's something where you can theorize about market participants and how they will act in different situations. But I think that this really concretely illustrated that people who were believers can go to being non-believers in literally a matter of minutes, just by seeing something happen on the charts and in the liquidity pools and so on that they didn't expect. Where they were so confident, and then as soon as everyone starts to see that the thing is unraveling, that sentiment can just be so self-referential. And so we had theorized that that's what would happen, but to really see it on that scale, I think it's easier to sort of believe it in your gut at this point.
Mm-hmm. I actually also, I remember a tweet that you actually put out that you said that we need a stablecoin grandma index to show real world adoption. I love that. And also make sure that no algo stablecoins rise again. So stablecoin grandma index.
Yeah, I mean, the stablecoin grandma index, it's somewhat tongue in cheek, but I actually think it's a cool idea. It's like, it's basically just like how many grandmas use any given stablecoin, right? And I said partially jokingly, although I do actually think this is maybe true, that I think Reserve is maybe used by more grandmas than any other stablecoin because it's used as ordinary money in some countries in Latin America. And then the idea is like, if any algo stablecoin started to creep up on the grandma index, that's real cause for concern. It's sort of okay in my book if crypto degens want to experiment with whatever they want to experiment with. They can have smart contracts that are just transparent Ponzi schemes, and as long as it's just gamblers gambling against gamblers, then like, okay, fine, have your fun. What I really don't like is when people, believe that the thing that they're using is going to be stable and is going to preserve their savings, and then it doesn't. So if anyone out there wants to start the stablecoin grandma index, send me a DM. I'll help you get it off the ground.
We'll put in the show notes. Well, let's talk about Reserve. So Reserve, you're a co-founder, if I'm not mistaken. So you lead the R token tribe. Yep. And are responsible for developing and promoting your smart contract protocol and including decentralized governance. Just side note, are you aiming to eventually become a DAO?
Yes, but in a sort of different way from how a lot of projects do it, because each R token that is governed in a decentralized way kind of has its own DAO. And so it's sort of like all of the stable coins that get created on top of the Reserve protocol will sort of be individual DAOs. And then, and then there is a question about like, what about the project overall in terms of like, making like developing improvements to the base protocol and so on. And so there we have ideas for how to basically decentralize the project further. There's a few things that we're still exploring and haven't solidified on how to do that yet. So I guess I won't say one thing or another because I don't want to misinform. But generally speaking, the idea is to get to the point where the project is fully decentralized on the protocol side, both in terms of the ongoing development and the individual R tokens. And one thing about that is that you could have one R token get pretty popular, and then a bunch of people could, write a bunch of code that upgrades sort of the protocol, the instance of the protocol that R token's running, and other R tokens may not use those updates. So actually, over the course of time, there might not even be one coherent effort to improve the reserve protocol, because the reserve protocol really is just a template that you can use to make different instances. And so it's actually going to look like a series of DAOs.
Okay. And also you're based in the US, right?
Yeah.
But you're operating mainly in Latin America.
Yep. Yeah. The project was founded in the Bay Area. And we do still have some team members in the US, although at this point, there are team members in, on many continents, and the vast majority of our team is throughout Latin America.
Okay. So you do have local staff.
Yep.
How did you manage to overcome, or were there compliance barriers in terms of in the US?
Totally. I mean, so basically, we've created this app that is, it's a cloud custody wallet. We hold the stablecoins for people in the way that we do it now. So that means that we have to operate, like any crypto exchange in terms of KYC and AML policies and so on. And also critically, as well, in terms of OFAC, which is the Office of Foreign Asset Control, and that's the body that implements the U.S. sanctions rules. And that's particularly relevant because we have customers in Venezuela, and there are not comprehensive, but there are broad sanctions in Venezuela that we have to make sure that we abide by. So in terms of overcoming compliance barriers, I think actually all of the like money service business compliance has been relatively straightforward. It's taken a lot of time and energy to build out all of our programs and make sure that all works well. But it's pretty, it's not that complicated at the end of the day. The OFAC compliance has been a larger lift, and we ended up basically creating a whole screening program inside of our application that goes above and beyond checking the normal list of names you check, because of the fact that there are sanctions that refer to Venezuelan government bodies. So we have a whole internal procedure for maintaining an additional list of names above and beyond the ordinary list, in order to make sure that we're complying on the sanctions front. So that's been more complicated, but I feel pretty good about it. Basically, we as a business decided early on to invest in being able to serve people in Venezuela, along with other countries in Latin America. And so it took a while to get that going, but it also, it's like a lot of other companies are nervous about offering services to people in Venezuela. And so by making that investment, we kind of differentiated ourselves. We ended up, as a business having a bit of an advantage, but also just as a humanitarian project, being able to serve this population that obviously was relevant in terms of having a need for stable currency when, maybe we otherwise wouldn't have been able to do that without that special investment. So I'm very happy that we decided to go that route.
That's great. So if I understand correctly, and you did already allude to the app. So users, you have the Reserve app, you refer to it as RPay. So they download basically from the Apple Store. I actually tried to do that, but it's only in Spanish? Or I got the Spanish.
Yeah, the app is only in Spanish right now. It will be multilingual relatively soon, because we're actually in the process of getting prepared and getting licenses in the U.S. to offer service to people in the U.S. As well. But yeah, right now it's only really used in Latin America. I think you can download the app anywhere, but you can't actually sign up unless you can sort of show that you're in one of the countries that we offer service in.
Okay. Yeah, I didn't go further, but I was curious. And so they download from the Apple Store or wherever to interact with digital dollars. So these are based on the crypto stable coins, that the mix that you have. But users do not handle the stable coins themselves. So the app is not a Web3, like you just said before, in terms of decentralization. It's not a Web3 non-custodial wallet at this point.
That's right. That's right. You can withdraw your RSV on chain, and we'll send you an ERC20 transaction. You can deposit RSV in order to get the balance into the app. But yeah, it's like a Coinbase account in that you just see your balances and you can transfer them to other users on the platform and buy and sell them with fiat currencies.
But you're planning to change the custody model in the future?
In the past, we planned to fully convert the app from cloud custody to user custody. Mm-hmm. And now the way we think about it is that it probably makes sense to support both because both models have advantages and disadvantages. So I think in the future we'll support both. I think it's really important for people to have the option of self-custody, in part just, for their own personal. I feel like sovereignty is actually a little bit overstating it, but just having control of your money, I think is a nice thing. Right. But also, there are some situations where I don't really personally fully agree with all of the controls we have to put in place on people's transactions as a result of the regulatory regimes we're subject to. We do, we comply as closely as we possibly can, but I don't personally like that. I like the idea of people having their money, being able to transact any amount at a time that they want to, and being able to have any size balance that they want to. I just think that that's better. And I think also there can be situations where people in certain countries or with certain profiles get progressively pushed more and more out of financial systems. And I would like to be able to offer people a service where they can know that that's not possible. Where it's look, even if we as a business are forced to stop serving you, you control the money. And so you don't have to worry about your balance being frozen or being taken away from you or anything like that. The only thing you have to worry about is the convenience of this platform going away, but you control the money itself and you can go use it on any other platform that you want to. I think that that's pretty powerful. And so the only reason we didn't start that way is just that the practical constraints of having built on Ethereum, we needed to be that people can make small transactions quickly and cheaply. And so we built in a centralized way, and we've been watching the L2 space develop, thinking about, what is the right way to allow people to hold and transact their coins directly on, a blockchain or some sort of layer 2.
Okay. Yeah, we'll get there. I'll actually nitpick a little bit. So as I understand, there are two ERC tokens. You have, obviously, we talked about the RSV token. So this is the basic stablecoin, right? Yep. That's backed by the sort of the trio 1/3 formula between USDC, True USD, and Pax.
That's right. Yep.
All running on Ethereum. And then you have the governance token, the RSR, or reserve rights token.
Yep.
Without current functionality, but it's in the works, and including staking opportunities.
Yep.
Did I say that
That's
right?
all right.
So I also read, so you're aiming to also link both functionalities at a later point, or where are you now in terms of the process? So you're in terms of RSR that has not been launched yet.
Yep. So we're close to launching the full reserve protocol. It's kind of weird because we've been around for several years, and yet we still haven't launched our full protocol. And that happened because we kind of decided to take this massive detour and build out our app to try to make stablecoins actually useful as money to ordinary people in the places that need it. We kind of figured actually that's maybe a bigger challenge or bigger barrier to real adoption of the type we wanted. So we decided to go ahead and do that. We came back to working on the protocol about a year ago, and so we're getting close to launching it. And what that will enable is, I'm super excited about it. It makes it so that anybody can deploy a stablecoin that's backed by a basket of other ERC20 tokens on Ethereum. And you can choose what that initial basket is. And you can also define you can define sort of a deterministic set of other coins that can be swapped out in the case of any sort of emergency. So there's like a basket, and then there's sort of like a sort of backup basket kind of configuration. And then there's a couple other elements to the protocol. So one is decentralized governance. So you can set up an R token, as we call them, to be governed in a decentralized way, so that changes to the basket and other parameters can be made not just by like a single wallet or a multi-sig, but by like any arbitrary smart contract. And we think that's important for the long term of how this all works. And then there's also a notion of insurance, and this is RSR comes in in terms of governance. It's the natural sort of stakeholder token to play a governing role. Although you can design an R token that is governed in some other way that doesn't involve RSR if you want to. But I think in general, many of them will sort of rely on reserve rights stakers to govern. But let's talk about what does staking mean. So if an R token has been deployed. Well, okay, there's one more piece we have to get to before staking makes any sense, and that's revenue. So an R token can generate revenue. And the most natural revenue mechanism for an R token is the lending out of its collateral. So basically you can have a collateralized stablecoin that's like one-to-one backed, but you can set it up so that the underlying assets, whether they be US dollar stablecoins or other tokenized assets, or even cryptocurrencies, you could have ETH in the basket or whatever, those can be lent out through existing decentralized lending protocols like Compound. And so the stablecoin, the overall R token, can generate some amount of revenue through that. That revenue can be divided. It can all go to the R token. Basically, the R token itself can just appreciate, or it could all go to the RSR stakers, or you could define any combination therein. And you can actually even divert revenue to other addresses. It's like an open system. So you could create an R token and decide, I'm going to give 5% of the revenue to myself. And as long as the governors leave that parameter as what it is, then you would just get a 5% cut of the revenue that R token generates. But if the governors change that, then you would stop getting it. Anyway, so as a reserve rights holder, you can look out at the available R tokens and see which one would offer you the best combination of revenue and low risk, right? Because you don't want to take very much risk, and you want to sort of provide services and earn reward. And so you can take your RSR and stake it on any one of those R tokens, or divide it and stake across many of them if you wanted to diversify. And when you stake an RSR token on an R token, what you're doing is you're basically saying, I'm putting up my capital, and in the event of a default of any of the underlying collateral assets, which may be likely or unlikely depending on how risky that R token is, my capital can be seized and used to make up for that default to make the stablecoin holders whole. So basically, I'm taking risk away from the stablecoin holders. I'm making the stablecoin safer, but in exchange, I'll get a cut of the revenue that this R token generates. And so it's similar to insurance in a sense, in that you're taking on risk, you're providing sort of backstop capital, and in exchange, you're earning kind of like an insurance premium. And we just call it like a staking reward, but it kind of is like an insurance premium. So basically, that kind of rounds out the two functions that RSR provides: governance and insurance. Now, those are the basics of the protocol, and the reason for the insurance layer. Like, let me try to explain that a little bit more. Let's say you have an R token, and one of the tokens in the basket is everyone likes to pick on Tether, so I'll pick on Tether. So let's say that there's some Tether in the basket, and let's say that heaven forbid, Tether actually doesn't quite have the full backing that it needs at some point in history. Maybe it only has 95% backing, right? Maybe they took some losses on some commercial paper, and they still have most of the money, but it's only 95%. And let's say that Tether comes out and announces, we're really sorry, everyone, but you can now only redeem 1 USDT for 95 cents instead of $1. And maybe they would do that so that there wouldn't be a bank run, right? It's not like the last 5% of people will get nothing. It's like everyone's going to get only 95%. Okay, so all of a sudden Tether goes from trading at $1 to trading at 95 cents. And let's just say that Tether makes up half of the backing of that R token. And so now that R token has lost 2.5% of its value, right? Because it's half of 5%. And so now, if there was no insurance, then the stablecoin holders of that basket, they would have just lost 2.5% of their value. Well, the way the insurance mechanism works is that in that case, the protocol would detect through Oracle price feeds that the USDT had lost 5% of its value. And as long as that loss shows up on the charts for more than a certain period of time, like an expected time window would be probably like 24 hours or something, then the protocol anyone can call a transaction to trigger a process where the protocol will automatically trade those USDT for whatever the predetermined backup asset was. So let's say the backup asset was TrueUSD, okay, for that one. And so the protocol would trade the USDT for TrueUSD, but it's still missing 5% of that USDT or 2.5% of the total value. And so it can also seize some of the staked RSR to buy some extra TrueUSD to get back to the value that the R token had before the default. So basically this means that, again, the reserve rights token holders are taking on that risk, and the R token holders don't have to worry as much about the risk. But in exchange, the R token holders get less revenue. So, like in this example, I simplified it a little bit by just saying it was USDT. What it actually could have been is like CUSDT, which is like the token that you get out of compound finance if you've lent out USDT. And so you could have basically USDT denominated backing, but with 1 or 2 or 3% yield because of the lending out through compound. And so as the R token holder, if there was no insurance, you would get all of that appreciation, all of that yield directly. Here, maybe you only got half because half of it was going to the RSR stakers. But in exchange for reducing your yield, you also then didn't take a loss in the case of that default happening. So that's kind of how that economic deal works between R token holders and RSR stakers.
Okay. And in terms of staking, you're loyal to the original meaning of staking. And I gathered you're not a fan of the exchange type where there's practical use of your protocol. I mean, no, I commend you for that. I mean, I think that's
it's like, we call it staking because you're putting your assets at stake, right?
Yes.
And so it's kind of frustrating to me that, people talk about staking when it's like you're just locking it up, you're just being paid to not dump, basically.
Right. Right. Just quickly before we mentioned, and sort of jumping around a little bit, but so with the users not settling on chain, so then I imagine the fees are not a problem at this point, right?
Yeah, that's right.
So in terms of, who are the liquidity providers?
In the app, the liquidity providers are basically existing foreign exchange brokers in the countries that we serve.
Okay, I was going to ask, are they banks? Are they private fiat currency exchange businesses?
They're not banks. They're not banks, but they are. They're entities. Like in some cases, they're actually small crypto exchanges that have decided to provide liquidity in our ecosystem. In other cases, they're just people who were trading dollars for local currency. Sometimes people who are trading crypto for local currency already. We've sort of manually built relationships and found upstanding businesses, some of them large, some of them small, who then all plug into our system and make markets where they buy and sell for a slightly different price, and that's how they make their money.
Oh yeah, I was going to ask, how do you find them? I mean, how did you even go about connecting?
I guess it's sort of like different ways in different countries, but we hire people to our team who are knowledgeable and connected in the relevant industries. And we often rely on their judgments as to, who's trustworthy, who makes sense to work with, who should we steer clear of. And that's actually gone really well.
Mm-hmm. So I read that you cover 5 countries with RPay. Is that right? Or I also saw on your blog that you're planning to enter Mexico, and you just said, okay, in terms of the US, which countries do you currently support?
Yeah, we currently support Argentina, Venezuela, Colombia, Panama, and Peru. And Mexico is next. And we're excited to expand pretty much all throughout Spanish-speaking Latin America, not including Brazil because that's a complicated, different world, as well as adding support in the U.S. That's kind of the near-term expansion plan. But really, we're as a team, we're in the mindset of going global. Even though we're not global yet, and we kind of have to expand one place at a time, we've mechanized the model enough that we should, in theory, be able to add all of the next countries much faster than we've added the current countries. And we've started to think about which other continents to focus on. And we really want to reach like total global serviceability as fast as we can. We don't know how quickly we can do that, but we want to do it as fast as we can.
Well, when the ruble crashed, did you look into maybe Ukraine or Russia, given this current situation? Or is
to be totally honest, we didn't at all. And the reason is just because, we have enough sort of political complication just from being active in Venezuela that we didn't want to take on additional political complication for the project at this early stage. And that's also a barrier to offering service in Lebanon, which we would like to do, but there's a political complication there too. And so, I hope that the service ends up being robust and decentralized enough that those political complications don't stop us in the long term from offering service, in as many places as we can. But yeah, in the short term, we all, a few people reached out to us, some investors said, hey, maybe you should blah. And we were just like, no, definitely not. We just don't have the appetite to jump into something that controversial at this moment in time.
Yeah, true. How would you illustrate the adoption up to now? So sort of savings versus transacting. And does it vary from country to country, or the trends similar?
Yeah, it does vary. The very first use case that we hit upon was actually a total surprise. None of us expected it. And it's that people I'm sure people all over the world, but people in some of the Latin American countries we serve have jobs online, and they earn money in dollars, and they get paid with PayPal or Payoneer or some other, sometimes Uphold. They get paid in a wallet in digital US dollars, and then they don't have a way to spend that money locally. And so by default, they often have to go to some sort of informal marketplace, like literally finding people on WhatsApp or Facebook groups to basically sell their kind of trapped, stuck digital US dollar balances for local currency. And because of the inefficiency of that marketplace and the risk that's involved and so on, often the exchange rates are really harsh, because people who are making markets there, they're taking on a fair amount of risk and doing quite a lot of work, find their customers and so on. And so you lose, often 10 or 15% of the money you earned if you have to convert it that way. And so we ended up being able to offer better exchange rates because people could take money that they had in some sort of digital dollar account, convert it at a relatively favorable exchange rate into RSV in our app, and then they could make another conversion into their local currency. And so that was the first thing that caught on. And people wouldn't really even keep money in our system at all. They would convert it, and then they'd immediately convert it out, because from their perspective, we were just some random company, like we could have been there to scam them or something. And so they would just use it as like a currency exchange mechanism. People started using it to send money across borders, sort of in the sense of remittances, sometimes in the sense of doing business, people, paying suppliers cross borders. And then in some places, we've actually gotten to the point where people are starting to do all sorts of ordinary day-to-day financial transactions with it. So, in Venezuela in particular, there are at this point something like 24,000 merchants who accept payment in reserve directly, and people actually do buy goods and services. The total transaction volume in RPay at this point is about $5 million a day. And, a meaningful portion of that is people buying goods and services. There's also payroll. Like we've actually started to see, okay, how do I explain this? We always keep track of what is the main method of people getting money into their reserve account in the app. And for a long time, it was conversion in from fiat currency. And recently, it sort of flipped to the point where most incoming money was actually just within the ecosystem, just from another reserve user. And so we did a survey because we were like, that's interesting. What's the top reason for those transactions? And we kind of suspected it was going to be remittances. And it was actually payroll, which is super exciting. So, the biggest chunk of the reasons why people are getting money into their account is they're actually just getting paid directly in reserve stablecoins.
Right.
And so you can sort of start to see the actual circulation in the normal economy of people getting paid and then buying things. And we have a little over 600,000 users in the app. Not all of those are active at any one time. But, it's like with that size of a user base and with, the current, $5 million in daily transaction volume, that's enough that new merchants want to join, right? Like it's a no-brainer to download the app, maybe print out a QR code, and start accepting it as a form of payment. And merchants also like to use it for their own treasury management purposes, even for, payments you get in, say, Argentine pesos or Venezuelan bolivars. You can convert your money easily into digital US dollars. And actually, a lot of merchants, what they do is they'll convert it into digital US dollars in the app, but then they'll make a withdrawal into an American bank account that they already have set up for their business. So that they have dollars in the banking system, because they can't yet really pay their suppliers with their reserve account, right? Like their suppliers in the United States or abroad aren't necessarily on the network yet. And so it's very valuable for them to be able to get it into the American banking system and then make normal commercial payments from there.
Wow. So you just said payroll. That's like the next level of adoption. That's awesome.
Yeah.
That's awesome. Because I listened to a bunch of also your community calls, et cetera. And I didn't hear that up until now.
We have like a really simple beta product that we provide to some companies that's like kind of a bulk payment payroll service. It's not even advertised, but we get asked for it a fair amount. So we have that running. And then a lot of it, I think, is actually small businesses where you only have, 5 employees. You have income in our ecosystem, the app, and then people are just like manually paying, literally on their phone, one transaction at a time to their employees.
Oh, that's awesome. So in terms of reserve, you mentioned you hire locally. I read that is your team structure up to 200 people?
I think it might be 210 at this point, but it's right around 200.
Okay. And so in terms of your organization, you're organized into 2 main tribes. So further on into guilds and squads. Did I get that right?
Yes, that's right. So the 2 tribes are the R token tribe, which is focused on the protocol and the production of R tokens, and then the RPay tribe, which focuses on the app. Yep.
Okay. Just sort of a twist. I also, just because I quickly checked out your Twitter, in terms of, you were just at the DC blockchain conference. Am I right? And you... Yep. In terms of the legal and regulatory framework, are there any takeaways to share from that? Or can you?
Yeah. I have a number of thoughts there. The comprehensive legislation that's been proposed by Senators Lummis and Gillibrand looks like it will take multiple years to work out. But there's a bill. It's called the Stablecoin Trust Act that's been proposed by Senator Toomey, which is much smaller, much more focused on just centralized fiat-backed stablecoins, and that looks like it could actually make it through this year. And I think that would be awesome. I think it's, as written, as far as I understand it, there's some nuances that like maybe fiat stablecoin issuers might be unhappy about, because I don't quite understand all of the ways that it limits them. But it basically takes the thing that we all want fiat stablecoins to do and formalizes it. It's like, you only hold the assets in things in these categories that are nice and safe, and make sure to be transparent and get audited and report regularly. And it basically it puts the OCC in the position to regulate these fiat-backed stablecoin issuers, unless they're a bank. A bank can do it as well without getting the special OCC oversight. So that all seems great. It also, in its current form, it formalizes the fact that you don't need KYC for the users that transact peer-to-peer on-chain. And I think providing that regulatory clarity and certainty would be great, because under existing law, that does seem to be legal. That's how everyone's operating. It seems like that's going fine. But it'd just be really nice to have that in a statute where it's 100% clear that even a bank issuing fiat stable coins would be able to allow users to trade them back peer-to-peer or back and forth between each other peer-to-peer without necessarily having to maintain KYC information for them. So I'm a huge fan of that bill. In as much as I understand it, I hope that it makes it through in its current form. There's some concern that like that last part that I mentioned might not survive the process of going through various committees and whatnot. But I think it'd be great for the industry if that is the first kind of major crypto law that gets put into place. And I'm really thankful to Senator Toomey for proposing it. So that's like kind of my current understanding of near-term regulation that's on the horizon. I think what else can I share that's interesting here? One big challenge is what do we do about algorithmic stablecoins?
Right. I was just going to ask because that was that part of the discussion.
Yeah, it's people talk about it, but it's pretty unclear what to do. Right. None of the currently proposed regulation actually says anything about decentralized algorithmic stablecoins. And if you think about it, I've thought about it, for a little bit, and it's like, well, you can't really stop people from creating them because anyone can create them worldwide and they're totally permissionless. So if you're an American regulator and you're thinking about how to protect US consumers, stopping Americans from creating something dangerous wouldn't have stopped, say the Terra team in Korea from creating such a thing. And so, it's like maybe you could try to get all countries in the world to have a similar regulatory framework, but that just feels almost impossible. And so in my view, it's like either we'll just not regulate them and like the world will just have to learn that these are dangerous things that you don't want to play around with, in the way that, people tend to understand that Dogecoin is highly speculative. Maybe the world can come to understand that algorithmic stablecoins are sketchy and you shouldn't touch them. The thing that worries me about that approach of just, sort of not protecting people from themselves is that if you are part of the crypto industry right now, you have just been trained that algo stablecoins are dangerous. You're not going to touch them. Nobody's going to touch them for a while. But if you join the crypto industry 7 or 10 years from now, this could just be like a sort of a tale from the distant past. It's kind of like, people who join crypto today, maybe they hear about the DAO hack, but maybe they don't really know what the DAO hack actually was. They don't really understand that, it led to like a forking of Ethereum. There's a lot of knowledge that just naturally gets lost as time goes by.
Right.
And so what I worry about is a scenario now where we keep on repeating the past every so many years because the industry is growing and there's sort of all these new people who don't really understand because they weren't around for, the major collapse that just happened. And so I see the potential role of regulation as trying to take lessons from the past and somehow propagate that information forward into the future and deliver it to consumers in like a just-in-time way where like as a consumer, maybe an exchange or a wallet is kind of forced to disclose to you some information that somehow helps you make a more informed decision, even if you weren't here to like learn this lesson in an intuitive way. So I imagine a possible regulatory regime where basically, stablecoins are categorized somehow. This is not necessarily easy, but, I think it could be done. And then, consumer, sort of the platforms that make cryptocurrencies available to end consumers are required to like disclose, the categorization and maybe some sort of information about the type of stablecoin that somebody is using. And again, if you wanted to protect the consumers all around the world, then countries would need to regulate that each individually. But each country sort of gets the benefit when they institute the regulation immediately for their own citizens, right? It's like the US could have this disclosure regime and that would protect American investors immediately. And so you can imagine US regulators actually or lawmakers being motivated to adopt a statute that actually works to that effect. So that personally is my most productive thought so far and how we might regulate. It's not fully baked and maybe it doesn't make sense. Maybe it's better to just, let people learn. And I do actually think it's like with the securities laws, for example, I do think there's kind of an interesting thing. If you look at the crypto industry and you look at all of the organic sort of response to scams, there's actually, in a way, like people in crypto are like much more scam savvy than like people who have never dealt with the crypto industry, because you just learn, you actually are, you're exposed to the truth about human nature, which is that there's a bunch of sketchy people out there who are very happy to scam you at all times. And this is just a domain where they're allowed to do that, at least so far. There aren't things that are really preventing a lot of those things. And so you kind of develop a thicker skin. You kind of learn the lessons, and you end up learning how to protect yourself instead of having a regulatory regime protect you. And like, in a sense, like part of me is kind of like, maybe that's good. Maybe it's good for people to kind of like touch the hot stove once and get burned, and then learn not to touch the hot stove, instead of being born into a world where there's these like bumpers where you can never touch the hot stove, and you don't even understand that it is hot, and you're just sort of complaining about the bumper because it's getting in your way. I don't know. There's something interesting about that as compared to like how we deal with the trading of securities.
Well, sure. It's growing pains. It's like a little child, right? Just like what you said. Yeah. And if you dive in, I mean, of course, people get hurt, and it's horrible. And I guess what happened to Terra, et cetera. But otherwise, you're not going to get anywhere. And if you're in it, I also find it. I mean, I think you just touched a good point that there's also, it's not all bad. That's also very good. And there's also a lot of proactivity trying to get over the growing pains.
Yeah.
Wow. Well, we've actually been speaking for over an hour. I have a few more questions, if you don't mind.
Yeah, I'm happy to.
So this is just my curiosity. I mean, you're backed by big names such as Peter Thiel and Coinbase. Do you get, I want to know, do you get nervous or overwhelmed by carrying such a mission as with Reserve? Are you just like fired up and go every day?
No, I get nervous and overwhelmed.
Okay.
I think there's, it's an interesting question. It's like, the thing is that I'm not nervous and overwhelmed because of those big names. I think, Peter Thiel, for example, he's a very savvy investor, and he knows what risk he's taking when he invests in something super early stage. And I think it's like, he met us and he's like, all right, these people are smart, and if this works, it could be huge. And like, of course he was, I'm sure, quite uncertain about whether it would possibly work. And so obviously I want to do right by all of our supporters, but I think I get much more nervous and overwhelmed because of our public token holders. Right. Because, I worry a lot more about public token holders buying the token and maybe not understanding the nature of the situation. And so I think that's like a much larger source of stress for me. And also I think actually a lot of it is also just about like, my relationships with the people on the team and that we're working with, and the people that I'm dealing directly with, where, in my position in the project, there's sort of the situation where there's always like a 1 to 2 month backlog of things that I wish I had gotten done by now, where people are waiting on me to do them, because I kind of am the right person in the right position to do that thing. And, maybe we haven't found someone else who can take on that particular aspect of my role yet. And so I kind of feel nervous and overwhelmed just because, in order for other people on the team to succeed, they need things from me. And so I'm kind of constantly putting in as much time and effort as I can to empower other people to get things done, to debottleneck things, so that other people on the team can make progress and succeed, and so that we can do the thing we're trying to do overall. And for some reason, like for me personally, that like strikes at the heart of my character, where like I really don't want people to be waiting on me, or to let down people who are part of the thing directly.
Well, it's in terms of the app. I mean, you have such a growing user base. It's a responsibility, but it's also sort of revolutionizing the way your mission is going forward. So
and that's interesting, because that actually is a whole part of the project that I have mostly handed off, and I mostly am not the bottleneck on that. Really, Gabo, who is Venezuelan, who has a long history in crypto in a different way, from Venezuela, who came on and ended up becoming the COO of the project, and is the leader of of the whole RPay tribe. He's really the responsible party there, and and him and the whole RPay team make that go every day in a way where I'm not actually very involved anymore, which is really awesome. And they're really doing a fantastic job, much better than I could have done, honestly.
So in terms of plans for the future, I know probably everyone asked you about the roadmap. I listened to a community call that you had in May. You mentioned that the main focus is growing the RPay user base. Can you share with us sort of your general roadmap, or like you mentioned the launch of RSR? What's coming soon?
Yeah, totally. So yeah, I mean, on the app side of things, like I mentioned, the intention is to, expand throughout the rest of Latin America and the United States pretty soon, and then, aim to go global as quickly as we can. Don't really know how long it will all end up taking.
Sure.
And then, but we're also on the app side building out the product itself to be more and more fully featured. Adding support for a card to be able to spend in like the ordinary, transactional economy, and then also adding various other features to make it a not just a simple, sort of one-trick financial app, but like a more fully featured platform. On the protocol side of things, with the launch of the full protocol coming up pretty soon here, at that point we'll be focused on educating the crypto community about, sort of the R token standard, about the fact that now you can create these basket-backed stable coins, and providing direct support to anyone who wants to do so in terms of answering their questions and educating them on how it works. And then also, if R tokens get created that we think make sense and that the market shows an interest in, which I hope will happen, but we won't know until it happens. If that happens, then we will put effort into promoting them, to getting them listed on exchanges and helping get the word out. And the ones that we think are actually, if there's an R token that we think is like really safe and provides a really good value proposition to its users, then we would want to integrate that into our app itself. But we don't intend to actually create any R tokens ourselves, which is a little bit funny. But like basically, we're taking the approach of building the platform and releasing the software, and then allowing others to actually create the R tokens.
Just a quick question. We talk about your basket. Does your governance have sort of a fund manager, or that's how I would see it for choosing the stable coin, like for RSV, for example, that basket formula, or for your planned basket of assets approach down the line? Like who does that? How does that work?
Yeah, so today, RSV is governed by the core team. Like we just have a multi-sig. So there's nothing very interesting about that. The default decentralized governance mechanism that the protocol will support kind of out of the box for people who want to use it at the beginning is very similar to what like compound finance uses, with like one token, one vote, very democratic. And that the twist there is that your one token, one vote is not all RSR holders. It's only RSR stakers on that particular R token. So if you staked, then you also can participate in the governance of that R token. But we really don't think that that is the right paradigm of governance in the long term for decentralized governing. We think that there are issues with one token, one vote, where basically as the token holders become more and more dispersed, you could just end up getting lack of proactive governance, but you could also end up getting potentially attacks where if everybody's anonymous, you could potentially cause the governors to collude to find ways of devaluing the R token and stealing the collateral. And I think that in the short term, I'm not too concerned about that, because I think a lot of the RSR holders are not only financially motivated, they're also ideologically motivated, and their reputations are tied to their behavior. But once you have, once you have a fully anonymous dispersed token holding population, I think that some of those forces change in a fundamental way. So we actually we'll be directly executing and through grants funding decentralized governance research, because we think that's kind of one of the two main huge hairy problems that has to be solved for a long-term vision to work. One is getting decentralized governance right, and the other is kind of the tokenization of all existing financial assets.
Right.
So that's in terms of roadmap in the near term. Other than promoting our tokens that look promising in the short term, we'll be putting a lot of effort into governance research in order to support that long-term objective.
Wow. Well, thank you. This was amazing. I guess before I sort of ask you about closing thoughts, is there anything that I haven't asked that you'd like to share? I mean, that we've covered, sort of jumped around a bit, tried not to be repetitive, things that you've already said in other podcasts, just to provide more knowledge. So is there anything else that maybe I haven't asked that you'd like to?
I think we covered a lot of ground here.
I jumped.
One interesting side note is in response to the UST collapse, I've been interested in trying to catalyze some sort of stablecoin rating agency or like rating website of some type, kind of like a coin market cap for stablecoins that helps people understand them. And that could actually relate to like that regulatory plan where if you did have like a solid independent body that was doing kind of ratings, then it could actually end up being referred to by regulators as like the thing that exchanges have to disclose. So I just bring it up as a quick plug because if there's anyone who's listening all the way through and finds all this fascinating, I am currently seeking people who are interested in working on that. And you wouldn't be working for Reserve if you did that, because that can't really be a Reserve project. It has to be independent. But we're interested in putting some funding behind it to get it off the ground and then helping it become, independent financially. And so, seeking people who are the kind of geeks that, like to read all about stablecoins and try to figure out which ones make sense and don't and why. But also people who are interested in like marketing and communications, or sort of the administrative and sort of project work that would go into making something like that a success. We're interested in talking to people about that right now. So that's the thing.
Well, that's awesome. So in terms of information on where to follow your work or what's the best way to get in touch if if somebody's interested in getting in touch, I would say just, DM me on Twitter, and we can have a conversation about it. If we do manage to get something like this off the ground, I'll definitely be talking about it on Twitter in the early days. Well, awesome. On that note, thank you, Nevin, so much for speaking with us today. Given the growing and some negative pains of the crypto market right now and in general, as well as the global picture, it's really relieving to hear that there's a solid and ethical team trying to drive the safe and I actually have to quote you a little bit and steal this from you, safe, sustainable, and stable currency human right phenomenon going forward. We will definitely continue to follow your work, and I'm a fan, and hopefully we'll be able to invite you back at some later point if you're not too busy. And so I wish you good luck, all the best, and keep doing what you're doing and also the way you're doing it. So cautiously and transparently.
Awesome. Thank you so much. Yeah, I really appreciate you having me here to discuss.
Thanks, Nevin.
Thanks again to our guest, as well as thank you everyone for listening. Thank you also to the Badia music team for providing their music. You can check out their latest album on badiamusic.com. You can find all supporting information on our website, blockchainrecorded.com, and listen to us on Google, Apple, and Amazon podcasts, as well as Spotify, Radio Public, and Stitcher. Stay healthy and tuned for our next episode.